Hello everyone, welcome back to another episode of Simply Investing. I know it's been a while, but man, what a week it has been. Stock went up and down. Martin Shkreli kind of arrested there. Kind of knew that was going to happen. I watched some of his videos and he's saying that he's a genius, and it's not a genius, just you're willing to do stuff that's illegal. It's not being a genius, it's just being a fool. I mean, anyone could have saw that coming. He bought that little drug company for pennies, pretty much, pennies on the dollar. Said it wasn't going out of business, so the stock naturally turns around, right? Okay, so you made some money. Anyone can do that. It's not really stock manipulation. However, the fact that he lent out his shares for short, then pulled them back and said, no, I'm not going to lend them out, screwed over a lot of people and thus raised the value again. It's like his little stock just rose again. So when you have 70% of the company and you've bought it for, I think it was 70 cents a share, or less, or it was less than $1, and it rises up to $35, you just made a tremendous fortune. But I kind of saw that coming. If he had two former hedge funds, it's like, why does a hedge fund manager leave a hedge fund? That's the question. If you're working with someone and that hedge fund manager left, there's a reason. It's because they're inept at making strong business decisions, and you probably shouldn't deal with that hedge fund manager. But it's just so many people were like saying, yeah, finally that guy. But it's not. Well, one, people realize that it's not illegal to raise the price of drugs, unfortunately. In America, you can raise it as much as you want, especially even if it's a life-saving drug and people are in desperate need of it. It's not illegal to raise it. That's what people get, and people want to talk. All these politicians talk about, you can't socialize medicine, but this is why you need to socialize medicine. I mean, you're in the free fucking country and you don't even have the right to good health. Good lord. But people have the right to profit from your poor health. That doesn't seem like a good system. That seems like a system that's designed for people to die off of. So it's like, oh, I'm sorry, you're 70 years old, this medicine could help ease your pain. It's gonna be about $100,000. Like, oh, you don't have it? Oh, well, I guess you're gonna die in pain. Oh, that's very fair. I mean, it's more a rant about the country, but I don't know. It's like our country's a little fucked up right now. And got people toting gun controls, like that guy in the church. I think it was like 8 months ago that shot a bunch of black people in a black church. People causing for stricter gun control, but it's just like I said before with a lot of people. It's like everyone's got that one family member that you just don't give a gun to. Like you wouldn't even give a pair of safety scissors to. Like why would you think that's okay? But it's a crazy world, and all I can say is just try to be safe out there and live through it. But we're in the only country where they can, one, the insurance company can drop you if you have a terminal disease. Two, so it's like if you get cancer, the insurance company has every right to say, fine, you're done. Pay for your shit on your own. People lose everything in medical debt. I can understand if you lost everything to debt caused by your own selfishness, but to lose it under something that you can't possibly control is fucked up. And that's why the United States healthcare system is fucked up. I mean, I used to work for a company that managed their telecommunications for hospitals and doctors. This was years ago, like 15 years ago. And, these hospitals are making money hand over fist. And I was in a time where you didn't have insurance. It's like, what happened to the Hippocratic Oath? No, don't have insurance, push that person out into the curb. Let them die on the street. Doesn't seem very humane. Doesn't seem very human. But anyway, crazy day on the markets. Now, I did a lot of buying during that time, but I wanted to express my strategy of how I mostly generate my money. I tend to buy stocks and it seems very simple to buy it on the low, sell on the high. But not all stocks function like that. Like AT&T. I would say if you look at it over the last 5 or 6 years, that sucker has been sitting right around between $33 and $35. Maybe spiked up to 38, close to 40, but it stays relatively the same. That's a dividend stock. They pay excellent dividends. You buy it, you hold it, you sell it when you die. That's AT&T. That is a blue chip stock. It does not deviate. Now, if you want to do the buy on the low, sell on the high, you don't have to look at the entire market and find individual stocks. You have to find one stock that goes up and goes down on a steady basis. Right now, you can pick any financial institution. Then you find which one does the curve up and down. Then you find the one that goes down on the cheap. So now you know why I'm in Bank of America. It goes down to about $15 routinely, shoots up to about $18 routinely. Always roughly about there. So when you're selling 2,000 or 3,000 shares of it, it's not a lot, but those $2 to $3 ups and downs gives you about $2,000 to $3,000 a week. Now that's if you had 1,000 shares. So if you got 4,000 shares, all of a sudden that $2,000 that you did, now you times it by 4, all of a sudden every week you're making $8,000. Roughly, give or take. Usually it takes about a week. It goes up in the final 2 days, goes down immediately the next week. The trick is just patience. You don't have to be a genius. You don't have to be the world's greatest mathematician. You just need some patience. Some patience to find the stock and keep putting money aside to buy it, because the more money you have to buy that stock when it's on the low, the more money you're going to make when you sell it when it goes up a couple points. And that's it. You're not looking for, oh, I bought Facebook at $15 and I sold it at $100. No, we're not looking for that. We're looking for the stock that just goes up $1 and we sell. We buy the stock again when it goes down, and then we sell when it goes back up. And we want something that has a consistent trend of it, not something that does it every now and then. You want something that it's like it's been doing it for years. And Bank of America falls into there. Now, Bank of America is going like this, upwards, so you're just going to basically ride it up, but their dividends don't pay high enough that I would consider holding it for a long term. But for doing a stock like that, Bank of America is perfect, because it drops down 3 points during the sell-off. It raises 3 points when the stock rises, when the markets rise. So it's perfect, and it gets affected by a lot of external factors too. When jobs are less than expected, you can expect Bank of America to go down. If Fed raises rates, you can expect Bank of America to go down. You can expect Bank of America to go down on any news, anything. They could say they post their best quarter yet. Stock's gonna go down. You know, it's like the stock just goes down for no reason. So my suggestion is just be patient, find stocks like that, and be patient. Patience. It's just like I said, you have to have patience, respect the process, follow the process. You gotta do your due diligence, and you gotta just live within the system. You can't expect to do all this crazy stuff. Like, you're not going to find that stock, like, oh, I found a stock for 10 cents, bought 100,000 shares, and then it rose to $30 and I'm a millionaire. No, not going to happen. Not going to happen. Nope. You're more likely to find a stock that's going to go down $1 and go up $1, go down $1, go up $1. You're going to find those stocks a lot quicker. And if you're patient and you have no attachment to your losses or gains, you will start to make a steady flow. And before you know it, if you're one that wants to do this for a living, that's the best way to do it for a living, is to basically buy stocks that follow a bell curve consistently. They go down, they go up, they go down, they go up. They just follow a wave pattern pretty consistently. So, I don't know what else to tell you about that trade, but that's the best strategy if you have a low amount of money but want to start making some quick returns. That's the best way to do it, and it just takes a modicum of patience. That's all. Now for long-term stocks, I got myself Procter & Gamble, AT&T, PPL. I have Wells Fargo for long. I have a pretty diversified set of 10 stocks for the long hold. And that's about what I think you should have it at. I don't think you should have too many stocks and trying to manage all those. You should just manage one on your bell curve, buy and sell. Then put all the earnings that you make into those blue chip stocks that just stay steady. Once you maintain that curve, it's just going to be great for you. It's going to be absolutely great. So, that's probably the best way to do it. If you want to take trading into your own hands, it's very efficient. It's steady. You're not going to make a tremendous amount of money, but over 40 years of doing it, if you're 20 and by the time you're 60, your retirement's going to be looking pretty good. Probably going to be making about $20,000 to $30,000 in dividends, because you'll have such a tremendous amount of shares on your blue chip stocks, and you'll have made a tremendous amount of money on your bell curve trading. And it's probably the best way if you want to shore up your retirement, because you'll probably end up after 40 years with probably $10 to $15 million doing that, as long as you're steady at doing that and you don't have extravagant taste. And that's also part of it too. You also have not only do you have to have patience in trading, but you have to have patience in selling your not selling, but you have to have patience in generating your wealth, and then patience in spending it. I've seen a lot of people, they make a quick buck, and all of a sudden, they're buying a Rolls Royce one month, and next month they can't afford the insurance on it. So, don't fall prey to that. Just stay steady, stay focused. When you can retire or no longer have to work the job, regular 9 to 5, then I can say you can have some modicum of success. If you'd like an apartment in New York City, hey, that's great. But just realize that, once you get to 13 million, don't spend all 13 million on the apartment. Just keep saving for it. And, when you're 13, when your domicile is only 10% of your net worth, then you're in a good shape. And, through that bell curve trade, you can get extra money, start buying properties, renting them out, generate more cash. You'll be on a cash to buy basis, pretty much. So, that's all I have for you guys today. I really don't have any stock picks, because I'm just kind of holding my blue chips, holding my blue chips, holding my dividend stocks, and I'm just being patient. That's the best thing I can say for you. Just be patient. Be patient. Wait for the bottom outs of the sell-offs and buy. Because it's like all sell-offs, eventually everything comes back up. But with that said, good luck. Have fun trading. Be patient. Don't let the emotions get the best of you. Like and subscribe. Like my Facebook page, Simply Investing 2015. Follow me on Twitter. Have fun. Got any questions? Always feel free to comment. Don't email. I don't have time to look at my email, because I have to look at it on my computer, and I don't really have time. a lot of times, and I get so much emails that I might miss you, and because you get all those dumb promotional products and stuff. I don't even know how I got them, because I didn't use that email to sign up for anything, but that's the power of business. But anyway, always just comment or comment directly on the Facebook page. That's what that's there for you guys to comment and share and like and everything. That's what it's there for. And so good luck to you guys. Have a good week in trading. I know I'm thinking I'm going to do a video about doing background checks on your on who's managing your wealth. With that said, talk to you later.